Hi, welcome to the Market Alert for Tuesday, the 17th of December 2024. So Bitcoin roars to record high as stocks suffer worst breadth since 9/11, but the dollar and bonds were unchanged with mega cap tech soared. Yeah, the dollar is still strong. US stocks were bid throughout the session with notable outperformance in the Nasdaq. And it is an interesting one. And of course, you can't believe anything these days, really. But I thought it was interesting. It's something I've barked on about with the CPI and the job numbers that we had in October with the election, or just before the election. Biden lied about everything fully fed, all jobs created in quarter two were fake. So it's no surprise. It's absolutely no surprise. You can't trust anybody anymore in authority. Economic news today, climate change, that's out at 7 a.m. for the UK, average earnings, German business climate, German ZEW economic sentiment, and then we've got core retail sales and retail sales at 1:30 for the US, so it's all about retail sales today. They will be out from, they're from the US at 1:30. That's the main event for today. Right, so look at the markets from yesterday and kick off with the Dow. So in the Dow, we continue to see the red decline there down to 62. We're just below the 50 EMA there, and also the, just below the 62% retracement. The market could bounce off this area if need be. There's certainly some selling around for yesterday, given that the market was quiet. We're oversold as well, so due for a bit of a bounce here. 30-minute chart again, up in the derivatives, down in the cash. There seems to be a picture here that's been emerging now for the last week or so. And also with this low of yesterday ties in, of course, with the 50 EMA in the daily chart as well. So a crucial area for this market to try and bounce off. Let's have a look at the DAX. And in the German DAX, we've got some red coming in for yesterday and moving lower there as well. If we take out the green line here, we can expect to see lower prices. So what is the green line? That's coming in at 20,256. So watch that one this morning. And between that line and moving lower, this is marked up. So let's use that as an area of where the market could move down to. Notice how the 50 ties in with the 50 fib, that is, ties in with the 20 bar moving average, and the 78.89 ties in with the 50 EMA there as well at the moment. In the 30-minute charts, very, very choppy yesterday. As I said in yesterday's alert, expect the market to be choppy. We had the market moving lower initially with the flash news, but then it just became sideways, and overnight it's continuing to move lower. Speaking of the lower prices, the market has taken out yesterday's low there as well. In the S&P 500, probably still the stronger of all of these markets, still sitting sideways above the 20 bar moving average. A couple of days of red again, a couple of days of red there, then reversing. Market obviously waiting for tomorrow's FOMC meeting minutes to cut rates, and again up in the market for the S&P really for the day. There was a bit of turbulence there and volatility at 2:30 for the cash S&P, but this soon recovered. Overnight though, been a bit of a sell-off there, but only down to the close, nowhere near yesterday's low, so displaying a strong market once more. And in the FT100 starting to move down as well, so just breaching the 200 MA there as well, which is critical for this market to get back above that. It got back through a few weeks ago following the disastrous budget, which was there. Market moving back up above this, but is the reality still starting to come through? What a complete dog's breakfast it was. We'll have to wait and see. But this market currently pulling back as well. If we go down to here, these will give you some idea of where we are. We came through 38% retracement there, and we need certainly some support here at this level for the averages and particularly the 200 MA there. 30-minute chart drifting lower with the odd 30-minute spike to the upside, but other than that, market down and already having tested yesterday's low in the FT100 overnight. Market remains below the averages there, and they're all in the right order for the market to remain lower at the moment as well. In the US dollar market, sort of sideways yesterday and up on the overnight, so that's putting pressure on the metals. So let's have a look at that. And starting off with silver, as I said yesterday, this is not over on the downside. Expect the 200 MA to be tested or broken, as we've been down to this level before. If we have a look, 29.62, that's where, if for my money, it's going. They'll use this tomorrow, if not today, certainly tomorrow, to bring this market down. And in the 30-minute chart, it was all fine and dandy yesterday morning. 130, London fix, down we come. And overnight market's now broken the low, so expect lower prices for silver if the dollar continues to move higher. And it's certainly going to move higher, a lot higher, as we get closer to Trump coming in as well. That's I don't think that's just a one-off there. And prices for gold sideways to low, but a lot stronger than silver. As you can see there, London fixed yesterday, bringing the market down, but it hasn't taken out the low of yesterday, unlike silver. So a lot weaker in silver, which means the gold-silver ratio will have moved higher. So let's have a look at that. And in the gold-silver ratio, heading back towards that 89 level as price, and then also 87.78 is where we are on the upside. Managed to get the fibs on here. Let's just pull this back and just widen it out a bit so you can see the numbers there. So we've managed to get through all of the other numbers. It's just a matter of the market, will it fail at the double top or at the 89 level there. Right, let's have a quick look at yesterday's trades. As I did say in the alert yesterday, that market was going to be choppy, and choppy it was. Not just because of the flash news, but because of the market winding down for the festivities, and also that most important event, the FOMC meeting minutes tomorrow evening, with the rate cut from 4.75 to 450, I think. Let me just clarify that. Let's just have a quick look and see what it is. 475 down to 450 for tomorrow. So this is reflected in the market's choppy, and that's before we even kicked off in the cash market. So let's have a look. Market dropped straight off, and you can see picked up buying at the low, got green inside there at the low, so again support, and then the market just became sideways with all of the flash news. Market coming back to the low, but didn't really favor moving above, and then the trade switched, so a loss on the long side as the market tried to go short, and it did, down to the S1. But again, see the green inside of these bars and at the S1 trying to bring the market back. That's what we're seeing there. Prices then put in a potential buy signal, but then this is followed by a sell that is filled, but the market doesn't want to go lower anymore and turns around and puts in a buy. And this is what I warned about yesterday in the alert. And that was the morning session taken care of, and you can see how narrow the bars were. They were between 5 and 10 points. And then if we go through the mid-morning, even worse, really, really tiny bars. And into the start of the afternoon there, you can see how quiet it was. And you can expect more of this today, unless there's any geopolitical event. Then we had the US flash numbers. Market just bounced a bit off that. And then potential short that wasn't filled, and then prices just trading sideways to lower there for the remainder of the session. So currently the market is below the low of yesterday. The averages are all pointing to the downside. That doesn't mean to say it's going to move lower. I expect a bit of a bounce back towards the low of yesterday to try and break the pattern that we're seeing in the daily chart for this market. Okay, that's it for this one, and let's see what happens. So have a great day, and as ever, thanks for watching. See you in the next one.